Well, the last 4 days have been an absolute liquidation event in the market from just before the weekend on the Friday, when there was a lot of uncertainty with the Israel and Iran conflict, but also there's just so much de-risking occurring in the market that we've really seen that there's such a flood. Um, Friday we had a 5.9% down day. Saturday 1.28% down day. Sunday 4.22, and today already we've had a 6.89% down day. We've liquidated below our protected low. We're just above the 61.8% retracement level, and sitting around that 53,000, which is the area which we are challenging right here, which is the 52 to 51,000 protection area as a point of interest of buy. Like, should we break here? Should we break this general area of support? This is where the whole market is apparently going to freak out. Everyone is drawing this as the line in the sand, and that's probably going to mean that that's where everyone is going to freak out and think that the bull market is over. And maybe it is, but what we also know is that this is the summer of in America, and we always know that July, August is relatively quieter, and there's a lot of chop. What we're seeing from here, from March, if we do a regressive channel from up here down, so what this does is this creates an average trend line through the middle of where prices moved with a 2 standard deviation on either side. So where 90% of all trades are sitting within this zone. Right now, whenever it exits, it comes back in, and what we can see is we're already on a downtrend from March, as far as a regressive trend line goes. So we're on a downtrend. We have liquidated below, which means that there will be an exhaustion point at some point where we will come down, we will find a level to stop, and then we will move up. Even if I go to put this into an hourly zone, an hourly time frame, and where was the last level? Well, even from up here, that's fine. If we do a regressive trend line from up here, even in this space, we have deviated well beyond the support level of the trend line. So as far as this has moved well beyond its standard expected course. So that in itself is fantastic, because that means that on this day, when we had the imbalances through here, which we were talking about, that we were saying fast moves up equals fast moves down. Within the last 4 days, these have all been liquidated, which has opened up. So let's get rid of that to keep everything a little bit cleaner, which means that even in here, we have nice mitigation. There's no, this wick almost touches this wick. There's such a slow, like, it's the smallest level of imbalance in there. Same goes for here. It's very tight, where over here we had very large distance between the high of this candle and the low of this candle, but here is very tight. It's well mitigated. What we're seeing here, now we can't take this candle into 100% until 10 o'clock tomorrow, until that candle is officially complete, because this candle was birthed less than 4 hours ago. So what we can see is this is a formation of an imbalance. This is like a phase 1 of an imbalance. So Phase 2 is when this candle is complete, and then that is something that, oh, actually, let's leave that there. Let's leave that there because that will be an area that we are going to come back, because there are orders in there that have been flipped. So as price has gone down, everyone's gone, I'm about to short out. And before they sell out, they flip their margin direction and they go from long to short, and then it just moves so much further down. Now, let's go onto the hourly and let's clean this up. Alright, so what we're looking at here is, over here we've got our liquidity, hourly liquidity retest coming through there. This one is mitigated, this one's mitigated. That one, because there is no two candles touching and it's just a full imbalance candle, that one becomes a retest. So that will start to become a level of resistance, as will this one, level of resistance. But through here, daily candle's been mitigated, this has been mitigated. So now we're looking at these areas. I'll keep the protected low there for the moment, only as an area of interest, just because that's where the low was that we were watching back in time. And so just so I can keep an eye, I'm not using it as a level of, not as a level of support, but I am looking at it as a level just to keep context. That's all. So it's always the second candle. The second candle wick generally forms a level of support, but what I want to see is this candle move away. Sorry, let me just finish this. So what I want to see is this candle come in, come down, test, and then shoot off, and then that's what I'm looking at to take out this wick to move to higher prices. But we need to get a few candles in here to form some structure, a little bit of mitigation. We want to see this start to be an accumulation area through here. Yeah, so I want to see this as an area of accumulation for price to in this accumulation area, then price comes up through and then moves ahead, unless it wants to move down and to start to mitigate these liquidity retests down here, and then down here is that point of interest long around that 52,000 to 51,000. 51,000 to 50,000 is the genuine line in sand where everyone seems to be freaking out over. But we are just playing the small moves, and we want to see areas of liquidation of longs and liquidation of shorts, and we want to play to those. And so up here, and as we go through here, this will all interestingly, this was the area of the daily imbalance. So even in that daily imbalance from yesterday, that was so that was this morning's move included in Sunday's candle. So anything before 10 o'clock becomes Sunday's candle. And so this is where Sunday ended here. We had a sell-off. The market opened, actually, sort of from 4 o'clock, 5 o'clock, and then everything started to sell off from 7. From 9 o'clock Australia time, everything just started to drop off. Now, we're about to wake up the UK and Europe, and the London exchange will open, and as those traders come on, we're going to start to see a little bit of decision making going on, and then once we reach 10 o'clock to midnight tonight is when there's going to be a little bit more action on what the US wants to do. But until then, we just want to see a little bit of accumulation going on here. If we see accumulation for the next sort of 4 hours or so through here, and then a quick tap on this hourly liquidity at 53,500, then I'm going to look for a short long just to come up, tap this like 55,000, just try and catch maybe $400 or $500 per coin, and just keep it very small and be prepared that the market may move against me, come to take out these liquidity levels below, but have larger buy orders ready in place to capture the move should it move against me. But that will position and average my price down into a better space for me to capture a better exit price. And so, with that being said, that's all for today. I hope everyone survived the weekend, and I hope everyone has a spectacular week trading moving forward. Remember, just trade your plan. Keep it tight and take profits where you can. Alright, bye for now. Thank you.